Okay, morning everyone. Looking at the US stock markets, the Dow has again breached towards the high of 24,500 points level. Since then, it staged a healthy pullback 4,000 cycle level and staged a good 4 consecutive sessions of climb. On yesterday itself, it risen about 0.5% by the ahead of the two-day FOMC meeting. That is likely to expect that the US is going to raise the interest rate again. So banking heavyweights continues to we're expecting the Dow to retest the US peak and subsequently made a good breakout towards the 24,750 points level. That will be the next resistance for the Dow Jones Index for now. In the meantime, 24,000 will serve as the immediate support level for now. 500, we did see the S&P 500 has made a good rally towards the recent peak of 2665 level. Since then, we did see the S&P 500 has once again retested the 2665 level on overnight itself after staging 4 consecutive sessions of climb. So moving forward, we are expecting the S&P to continue to trend here towards the 2700 psychological level on the S&P 500. In the meantime, the 2625 and also the 2600 will serve as the immediate support level for the S&P 500. All in all, the S&P 500 continues to make a good higher high and also the higher low formation, implying that the uptrend is still very much intact on the US markets. Oil prices, it then rallied towards the recent peak of $59 barrel level. Since then, we did see the pullback coming back in towards just EMA 20 level. So moving forward, we're expecting the oil prices to back towards the 9 over 59. We can confirm that the oil prices could be on the another phase of rally towards the 60 or even towards the 63 US dollars barrel level. In the meantime, the 55 will serve as a very strong support level for now. Okay, some of this on the local front. The FMKLCI has done staged some of the good recovery pattern following this bullish engulfing candle. CI managed to consolidate sideways, and on yesterday itself, we did see a good engulfing candle being formed on the FMKLCI as the key index goes above the EMA 20 level. Earlier, we rejected the EMA 20 level on several occasions, and on yesterday itself, we did see the key index has crossed above the EMA level. Moving forward, we're expecting the FMKLCI to continue to creep higher. Once the key index could breach above the 1730 level and stay above that level over the short period, then we can cover the FMKLCI is intact towards the 1750 level. In the meantime, the 1710 and also the 1700 serve as the level on the FMKLCI. The FX market wise, we did see this heavy sell down on the index below the 16,860 points and the 16,630 points level. But on 2 days ago itself, on the 11th of December, we did see a good bullish engulfing candle being formed on the FM or small cap index. On the market close itself, I did mention that it's time to bargain hunt some of the stocks, the non-stocks. So on yesterday, we did see a good level formation on the FM small cap index, and again we closed at the intraday high. So moving forward, we're expecting further bargain hunting activities on the FM small cap index towards the 16,680 points level. That will be the immediate resistance for now. Until we can see a good breakout continuation pattern, then only we can confirm that the lower liners is bracing for a good further recovery phase. Some of the stocks that can watch out for, one of it will be a Mars Steel. Mars Steel has earlier made a good rally towards the recent peak of around the $1.41 level and subsequently towards the intraday high of $1.65. After forming the shooting star candle on top of the $1.65, we did see the Mars Steel has pulled back just towards the EMA 60 level. The EMA 60 level was also served as a very strong on the previous occasion. Recently, after recovering from the EMA 60 level, we did see Steel has made a good record above the 1 ringgit and 39 cents level on yesterday itself after gap formation and subsequently rise above the EMA 20 level, accompanied by some of the mild rising volumes. So moving forward, we're expecting this pattern to continue to trend. This could be the breakout, pullback, and the continuation pattern for Steel towards the firstly, the first target price is at 1 ringgit and 51 cents towards the 1 ringgit and 65 cents level. Your cut loss point will be located below the 1 ringgit and 29 cents for Steel. Another stock that we can watch out for will be DNO. DNO has formed the double top formation on top of the 71 cents level. Since then, we did see DNO has pulled back and staged out a mild recovery pattern after recovering from the 63.5 cents level. After touching the 63.5 cents level, we did see DNO has once again climbed back above the EMA 20 level. So moving forward, we are going to monitor for this breakout of the 66.5 cents. Upon a breakout of 66.5 cents, then we can recommend on a buy for DNO towards the 71 cents or even towards the 73 previous high of 73.5 cents level for our DNO. Your stop loss point will be located below the 63.5 cents level if there's a breakout above the 66.5 cents. Upon the breakout of 66.5 cents, we also anticipate for the MACD line to give us a crossover signal, whereas the RSI could be trading back towards above the 50 level as well. Most of the technology stocks are also coming back, so maybe it will be M+. M+ has again made a good rally towards the recent peak of 75 cents a level. Since then, price has pulled back, traded just a sideways pattern supported along the EMA 120 level or on top of these 58.5 cents. But recently, we did see some of the build up in volumes again for M+ as price rose above the EMA 60 level. So moving forward for M+, we will monitor the 63 cents level breakout. Upon the breakout of 63 cents, then we can trade M+ towards firstly the target price of 67 cents, 71 cents, and also the 75 cents level. Your stop loss point will be located below these 58.5 cents level for M+. Following the recovery on top of the EMA 60 level, we did see the MACD indicator has really issued a buy signal above the 50 level as well. Another technology company that we can watch out for will be Alsoft. Alsoft has hit an intraday high of around the 295 cents, which is also the 10-year high for the stock. After touching the 295 cents level, we did see a pullback just towards the EMA 120 level and traded a sideways trend. But recently, we did see a good breakout accompanied by some improvement in volumes, pullback just towards the EMA 60 level, and a good recovery pattern over the past couple of days. So with the breakout pullback and continuation pattern on top of the 257 cents level for Alsoft to trend towards firstly the target price of 80 cents and also the 290 cents level. Your stop loss point will be located below the 263 cents, 257 cents level for Alsoft. So the story on this company is quite lucrative. If, as you can see, you're taking about 6 cents a risk towards 17 cents gain. So the risk ratio is about 1 to 3 times. With the strong crude prices, some of the oil and gas companies has also oil and gas related companies has also been on recovery trend. One of it is Wasiong. We learned within a period of time on Wasiong, and recently we did see Wasiong once again record above the 103 cents, subsequently risen towards the 125 cents. After touching the 120, we see the engulfing candle was being formed, and subsequently Wasiong has staged just a mild pullback with the EMA 9 level supported along the 115 level. So for Wasiong, what we need to see is we're going to monitor for this breakout above the 190 cents for us to trade our Wasiong towards going towards the 130 cents level. Your stop loss point will be 115 if there's a breakout of the 1 ringgit and 20 cents level for Wasiong. Will be Rich Energy could be levels compared to Hibiscus has rallied strongly towards the 82.5 cents level. So Rich Energy could be one of the laggards among its peers. So Rich Energy has recovered the 28 cents level. Price has made a very good rally towards the 51 cents. After touching the 51 cents level, we did see the pullback coming back in on rich energy just towards the 37.5 cents level. After touching the 37.5 cents level, we did see some of the mild recovery pattern for rich energy. We did see that did see a good T platform formation. This was the T-day pullback for 3 days, and a good recovery pattern as price closed on the intraday high on top of the 30.5 cents level. So for rich energy, we will wait for the breakout above the 48.5 cents level. Upon the breakout of 48.5 cents level, then we can trade rich energy first towards the 43.5 cents, 47.5 cents level, below the 37.5 cents level for rich energy. On the breakout of 40.5 cents level, we could anticipate for the RSI to trend towards the 50, whereas the MACD line could be back above the zero level as well. The last company for to be KGB. Symmetrical triangle formation breakout on the 8th of December on Monday itself. Subsequently, KGB continues to trend higher. So moving forward, we're expecting KGB to trade towards the first target price of 85 cents and subsequently towards the 90 cents level. Your stop loss point will be located below the 74.5 cents level for KGB. Following this, the closing an intraday high candle on yesterday itself, we did see that KGB has seen the indicator is short buy signal, whereas will be above the 50 level upon the breakout of 85 cents level for KGB. If you have any questions, you can put in the chat. You can put into the chat box. I'll reply you shortly. Retrox has then made a good rally towards the 5 ringgit and 91 cents level. Since the price has pulled back just towards the level and stay on the mild recovery pattern as price once again rose above the EMA 20 and also the EMA 9 level. So for Retrox, what we need to do is we're going to monitor for this short-term breakout above the 5 ringgit and 51 cents level. Upon the breakout of 5 ringgit and 51 cents and a closing above that, then only we can confirm that Retrox could be heading towards the peak of 591 and subsequently towards the 6 psychological level. Top loss point upon the break of 551 will be located below the 515, and if you can take further risk, the 494 will serve as the next support level for now. Continues to maintain a good higher high position, implying that the uptrend is still very much intact for Retrox. There's no bearish divergence signal at current juncture, so there's high chance that Retrox could be trading towards the 591 or even towards the 6 ringgit over the foreseeable future. If there's no further question, then we'll end the morning briefing for today. Thank you.